everyone's frustrated that Bitcoin's at 115. I mean, if you told me back here Bitcoin was going to be at 115, I'd have said hallelujah, right?
This individual revealed that the expert's book on hyperinflation was being used as a textbook in his government agency. This isn't just about economic theory, it's about national security. Please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. You can also check out our other videos on cryptocurrencies and the overall digital asset space, and drop your comments and observations in the comment section below. Everything you do helps with the YouTube algorithm and immensely contributes to the channel's growth. Thanks, and enjoy the video.
Possibly. I just don't know. I mean, I think if America is smart, and I think there are some parts of America that are smart in our higher government echelons. I mean, an interesting thing, I don't know if I've told you, I don't think you and I had this discussion. So I was at Bitcoin Vegas, this last one, and guy came up to me. I can't dox him, and I can't tell you who he works for. He works for something very heavily associated with the defense and intelligence community of the United States. One of his prior employers was NSA. So I checked him out. He's a real deal. And I said, what's going on? He walked up to me and he tapped me. He said, hi, I really liked your book. I said, oh, thank you. He said, your book is burning up the halls of my, where I work. I said, well, where do you work? He explained. I'm not going to say what it was. And I said, why? And I said, that's interesting. He said, why? He said, well, part of our job is to kind of look at every existential threat to the United States. And, hyperinflation is an existential threat. And, we're using your book as kind of a textbook to examine how and why hyperinflation is a risk and talk about our monetary, the monetary risk that exists within the United States. It's been very helpful. And I was like, wow, that's interesting. So you take that, you combine that with Jason Lowery's book, you combine that with, and Lowery telling my partner, David Foley, saying to him, hey, the people at the CIA, the DOD, the Pentagon, even high up in the Treasury, they get it. They understand that, the monetary threat here, and they get that Bitcoin is the solution. They're not stupid. I mean, Stephen Moran is a Bitcoiner. He said it. I mean, he had tweets supporting Bitcoin. They get it. Now, the Congress, the Senate, the executive branch, well, this one's a little better, but, they didn't get it at all. But these people understand that this is the superior form of sound money and therefore strategically important to the United States. So, I think there's a chance. And I don't know if Trump and Bessent will have the guts to do it before he leaves. I think some of it will depend on whether they think they're going to win the next election or not. I think if they go into the next election thinking, oh, no problem, JD's got it locked up, there's no chance of a loss, then they may not be forced to do it. But I think if it looks like they're losing ground and JD isn't going to win the next election, they might try a monetary reset right then, right there, and say, we're going to a Bitcoin standard, which would involve a massive devaluation of the dollar, an enormous one-time inflation across the board, but then actually a solving of the problem of sound money and forcing the government to balance its budget. So, and I mean, Bessent has said things like, we need another Bretton Woods and I want to be at the table when it happens. So, what? Holy shit. He kind of gets it. I mean, it's not, I mean, it's funny, these politicians, in some ways they're stupid, in some ways they're not. And, you can't really look at the $37 trillion of debt and not realize that that's a big elephant in the room, right? So, and the executive branch, there's a history of the executive branch doing monetary resets. I mean, the monetary policy of the United States is supposed to be set by Congress because it was said so in Article 1.8 of the Constitution, only gold and silver money and monetary was a congressional thing. Well, fine, until Lincoln printed greenbacks, executive order, right? FDR grabbed the gold, revalued it, executive order, right? Nixon broke us off the gold standard, 71, executive order. So, there's this history that just says, the president can change the monetary policy. So, what if they came out and said, guess what, guys, we're going to a Bitcoin standard. The new price of Bitcoin is $1 million a coin. We stand ready to buy it or sell it. The dollar obviously would depreciate enormously. And, we're going to match that with a balanced budget amendment. And off we go. And China and India are left there with their thumb in their butt going, oh, fuck, now what do we do? I mean, that would be the smart thing to do. Now, will we do that, or will they have the political cover or the guts to do it? I don't know, probably not. but it's the right thing to do. That's what we should do. If you want to restore fairness, and at that point in time, we could go forward in a much, much better world, because all of this grift, all of this monetary nonsense would just go away. It just would. And the currency would be sound again. The trade deficit, by definition, would have to disappear because we couldn't afford it, right? In other words, suddenly we would have to pay in real money, and if we didn't have the real money, I mean, their currency would appreciate massively in a way that we couldn't buy as much of their stuff, and it wouldn't be cheap stuff. I mean, the reason it's cheap stuff is that, they've been willing to hold our currency, and they've been, they've held their currency down. So they've been very, mercantile in their dealings with us. When you go to a sound currency and everybody's playing by the same sound currency rules, then yeah, okay, they can make cheaper shit. But we've got to have the money to really pay for it. We can't buy it. I mean, the way we buy it now is we issue debt to buy it. We issue paper, which they're willing to take in order to buy it. So we get more than our fair share of cheap shit. And they sell more, and they want to do that because they want to, be a mercantile nation. If we suddenly are back to a sound monetary unit, well, yeah, they're making cheap shit, but if we're not producing anything here that they want, they're not going to take our dollars for it. They'll only take Bitcoin. Well, then guess what? Suddenly we're going to have to actually earn and do something that the world really wants if we want to buy the world's shit. So the trade deficit would disappear. Follow what I'm saying?
Yeah, that makes sense.
I mean, just by definition. Yeah. So, I mean, it would just balance everything so that you'd have to, I mean, and it wouldn't necessarily be good for the United States right away, but we'd come back and find things to do. I mean, one of the things that I always marveled at this when I was younger is how much better the U.S. lived than most of the world. I mean, but it was because we had the reserve currency. I mean, we could print pieces of paper, send them overseas, people would accept them, even though they were somewhat worthless or had less worth than we were attributing to them, and they would send us their shit. I mean, that was a great deal.
I mean, it's absolutely insane when you say it like that. That's how it works.
Yeah, I mean, it's a great deal if you can pull it off, and that's why the American lifestyle has been as good as it's been. But I mean, sadly, this reset is going to involve everybody in the world is going to have to pull their own weight in terms of, you'll eat what you kill. I mean, if there are Americans doing good stuff and adding a lot of value, and I mean, look, in some areas we're extremely competitive. In technology, we're damn competitive. I mean, Apple and other companies. I mean, there's some things we do extremely well, and those will be rewarded. But there are other things that we don't do so well, and we'll have to either shape up or we won't live as high a lifestyle as we can because we're not adding value there.
He highlights a crucial pattern. Gold often serves as an early indicator for what's coming next. Gold moves first, sensing monetary debasement and inflation, and then Bitcoin follows, often with much greater force and speed.
So this is a chart that my partner and I, David Foley, use a lot. Just for people watching, so this chart so this is from 2018 to present. It's a little out of date because gold's now over 3,500. And this is the price of gold in gold and the price of Bitcoin in orange. Funny, I picked that color. But note the scales are very, very different. Gold has gone from 1,000 to 3,000. It's now 3,600. So it'd be the upper right-hand corner, be a little higher. And the orange is Bitcoin, but the scales are different. It's gone from 10,000 to 117,000, right? So Bitcoin's moved a lot farther than gold, but that's not the point of the chart. The point of the chart is the synchronization to some degree. They've kind of generally moved together, but here's what I found most interesting. Look at the beginning. Look at 2018, 2019, 2020. Look at how far. So there was a lot of monetary debasement in 2019 and 2020 as Powell pivoted and then COVID happened, and you could just kind of smell the money printer warming up and going again. And look at how gold took off like a rocket, okay? And it went from, I don't know, call it 750 to, almost up to 2,000, right? At the peak in 2020. And during that same time frame, look at how Bitcoin just languished along. I think on the scale there, I think it was around 10,000 about the time. It had actually been as low as 5, but it was kind of 10 in this window. And then suddenly, when the COVID thing really started to kick in, everybody figured out what Bitcoin was. Holy shit. Bitcoin went from 10 to 60 really fast. So gold moved first, Bitcoin crushed it when it moved. Much, much more movement. Okay, so then they kind of both calmed down. Gold dipped down. Notice again, gold dipped first. Bitcoin was still running. Gold was dipping. Whoops. Bitcoin followed it down. Sam Bankman-Fried played a role in that. Then notice how, gold starts to level off and we got a secondary run in Bitcoin because that whole run had been truncated by Bankman-Fried and the China thing. So it's a little bit of an anomaly. Then gold's kind of flat. Bitcoin came down there. The correlation didn't really work too much.
I think the correlation didn't work there, though, because that was, like, Checkmate describes that as the scam pump, because it was basically all the arbitrage, all the FTX stuff, the 3AC stuff. Like, I think you can almost ignore that second pump.
Okay, fair enough. Yeah, I was thinking, yeah, you're right. FTX wasn't 2021. It was over here. You're right. Okay. So then they kind of moved together. And actually, Bitcoin led gold down a little in 2022. Tighter monetary conditions. Okay, so now Bitcoin is enjoying, kind of the free money and everything. And when the free money gets taken away, Bitcoin gets slammed hard. Gold got slammed not as hard. But that's fitting with the, Bitcoin moves a lot further and faster, right? But here, but here again, notice this. In late 2022, gold starts moving up. Bitcoin's still flat, right? Yeah, it comes up a little bit. Gold moves up even further. Okay, Bitcoin goes up a little bit more. Then you get a downturn in 2023, gold starts moving down. Bitcoin's still going up. Oh, but Bitcoin follows gold down. Okay, so now gold starts moving up again. And this time there wasn't much of a lag. Bitcoin catches up. Then Bitcoin really catches up. Then you pause, but gold moves out of the pause again first. Then Bitcoin comes and goes crazy up again, right? And so my point here is just that they're correlated, but often gold smells it first. And right now gold is cooking. We're over 3,600. We're running to 3,700. And everybody's kind of tired. It's amazing to me, right? Everyone's frustrated that Bitcoin's at 115. I mean, if you told me back here Bitcoin was going to be at 115, I'd have said hallelujah, right? I mean, and or that MicroStrategy. I mean, I howl at all these MicroStrategy people who are just crying in their beer that Saylor's done them wrong because MicroStrategy hasn't moved for a while. Well, just wait, guys. MicroStrategy is going to 1,000 plus. And the point is that gold smells what's coming next because it's already moving, whereas Bitcoin is still lagging a little bit. But there's another chart, I don't have it here, but it shows M2, global M2, and it continues to grow and it's starting to go up. The global M2 is now growing at about 4.8% a year. It actually went slightly negative when Powell tightened things greatly in 2022, but we're back to growing. We've hit an all-time high. And all I would say is, Bitcoin people should be just rooting for gold because it's the early indicator. And so I fully expect that kind of in the tail end of this year, probably in the next, 3 months, we're in September now, I see us at the end of the year at 140, 150 Bitcoin and maybe $4,000 gold. And who knows, maybe the Bitcoin overshoots and goes to 150. Maybe we correct a little bit then. And I think this cycle takes us to kind of 200, 250 in Bitcoin. I think this cycle maybe takes us to 5,000 in gold. I don't know. It's look, some of this is just reading tea leaves and it's impossible to know with great certainty what's going to happen. But I find I want to offer words of encouragement to the Bitcoin people. Don't be mad that gold's running, be happy because it's about to come to you. and I own both. I own both. So
October is right around the corner. Bitcoin's going to rip.
I think it really is. I really, and as we know, that's the other thing I won't go back to the chart, but did you notice how the way it trades? I mean, it just does these long periods of nothing and then it really moves, it moves with authority. And I mean, I have to say, I'm a little puzzled when I look at all the BTC companies and the corporate buying, and I'm a little puzzled it hasn't moved. I mean, there's been a lot of Bitcoin soaked up from a lot of sources. And I don't know, maybe it's been suppressed by some paper. I do know, I used to have no fear of paper Bitcoin. Now I look at the size of the Bitcoin futures market, and it's gotten pretty damn big. I mean, the Bitcoin perpetual futures on Binance, the last time I checked, the numbers were quite large. And, I don't know, 20 billion. I mean, it was billions and billions, a lot more than it had been in the past. And so, so some people are on the wrong side of this trade, but guess what? They're going to get their faces ripped off, when Bitcoin takes out 130 with authority, because we're going to probably be at 180 faster than we realize. And, as I like to say, they're going to have a deeply religious experience. So, I mean, I think that's what we have to look forward to. So but this, again, it makes it all very, very hard because, and I think it's very important, people sometimes say, well, what's going to happen this week, this month, next year? I've been around, I've done this for a long time. I've been through a bunch of these cycles, and I try to think in 5-year time frames. As you all know, in 4-year time frames, you've always come out ahead in Bitcoin. And, trying to predict the next month or week or year, a half year you can kind of do, but it's kind of a mug's game. You just don't know. But I'm pretty sure that, in several years, and I rely actually a lot on the power law model. I think it's a decent model. It explains a lot going backwards on an R-squared basis. Now, I eventually think it'll break to the upside because I do think we'll get into hyper-Bitcoinization. I mean, the other thing I would say that I think is a very important point, Danny, and I want to make is that all of this is happening just in terms of kind of a small big print. I mean, we're kind of in a big print. I mean, they're kind of doing some shadow QE. They're kind of talking about stuff. We're anticipating lower Fed funds, et cetera. But this isn't really the big event yet, okay? We're just kind of warming up. I mean, imagine something really breaks. I mean, a la 2008 or 2020 COVID. I mean, and that's possible. Not certain, but possible. I think it's likely within a 2 or 3 year time frame. Something really breaks, and you know what they're going to do. They're going to bring out the monetary fire hoses. And man, when that happens, just look out.
Yeah.
We're going to Fed balance sheet 50. And this is how currencies fail. The next time it'll be bigger than the last time. It'll be more aggressive. There'll be more money printed. And there'll be a larger segment of the population that'll say, oh my God, they can never stop printing money. And that's the famous von Mises quote. Once everyone realizes that it's part of the policy and they can never stop, the currency's doomed. It's just literally doomed. And sadly, this is how hyperinflations occur. It could go to zero. I don't wish that on America. I actually don't think that's the base case of what'll happen. But it's a tail possibility if we don't get our shit together. And so, and I feel very comfortable leaning on the inflation side. Is this trade gonna make me fabulously rich? Who the hell knows? But is this better than any other trade out there? Oh yeah, I'm pretty sure about that. I mean, this is the right, we are on the right side of this trade, unless suddenly Washington, D.C. gets incredibly responsible. And of course, whenever I say that, everybody laughs.
He cautions that while corporate and institutional adoption is high, some of Bitcoin's recent price action may be suppressed by the growing paper Bitcoin futures market. But he believes these short-term trades will be overwhelmed when a big move happens.